Alright everyone, welcome back to the channel for another Bitcoin update. So, there's a lot going on in the markets today. I want to quick fire through a couple of charts and give you a quick couple of updates. In the last video we made for Bitcoin, we were round about this range, 21,600-ish, pushing up to about 22,000. And we were obviously, just like we've been calling this the entire way down, we've been calling for lower price targets, and they're finally starting to heavily come into fruition. I'm going to talk about a bunch of individual charts with a bunch of chart patterns, talk about a new chart pattern that I have not previously talked about before, and then we'll be moving on to the oscillators and looking at how in the short term the oscillators and momentum indicators are likely to affect the price. So right off the bat, to clear up some of my charts, I want to tell you what my price targets are. If you are new to the channel, warm welcome. My first price prediction that I've been saying for a very long time now is all the way down here at the CME gap. This has been in place since the 7th of December 2020. We created a gap on the Chicago Mercantile Exchange's futures, and now this leaves us with a price gap down at 18,400, and we've almost hit this target on the head. So I'm going to remove, actually I'm going to show you this price target over here first. We have the 300-week moving average coming in at 16,700. This is also my next price target that is in play, and I do think, just like I've been saying for ages, it's much more likely to start expecting a bottoming structure around this range than it was to expect a bottoming structure up in this range. Now, before we do get rid of this chart, I have talked about this before. I don't want to make this an Elliott wave video, but simply if you do draw the most basic 5-wave structure without worrying too much about the individual wave count between them, you can see, according to Elliott wave theory, we should bottom above the 1 wave, which should mean we should bottom, if in terms of the weekly time frame, we should bottom between these ranges, because it can come down to the candle body close and still be valid. 12,500, this is my absolute lowest price target. Am I saying it's coming down to there? Absolutely not. I've been saying for months now 16,500 to 14,000 is my bottoming range, and I'm still sticking with my guns on that. So let's move on to the previous chart that we were running, and I'll talk about a new pattern that I have noticed in the market. So what you can see is drawing our Fibonacci from our low to our high. We were basically talking about this massive bearish pennant to the downside. Now, don't worry about the price target of this. If you extrapolate it, we did this in the last video, it's going to be like 7,000 or 8,000. And once again, I absolutely do not believe Bitcoin is going anywhere near those ranges, so I'm not even going to humor the price target at this moment in time. But what you can see is our Fibonacci from our low to our high. We have broken down to the downside. This orange box is the most important range that you would need to hold if you wanted to remain bullish. And I have to emphasize that this is what the Fibonacci's tell us. This is not what my prediction is. According to the Fibonacci's, as long as we stay above the 786 Fibonacci at 18,500, which lines up with our CME futures gap, then we would be bullish. I don't think it's going to hold. I've been saying this for a while. I think we're going to break beneath it, and then if we do break to the downside of this chart, 14,979, basically call it 15,000. This is going to be the next target in play for Bitcoin, and this is subsequently going to allow us to come down another 21% to the downside. So let's move on to this new pattern that I have been noticing, and it is one of my favorite patterns that I do notice playing out with a very high degree of certainty in the markets a lot of the time, and that is an A, B equals C, D pattern. If you haven't heard of this prediction before, it's basically where you extrapolate a trend. So from your A down to your B, you take the trend line of this, almost like a bear flag price target, but you extrapolate up to the C correctory wave, and then you come down to fill the D, and subsequently this is called an AB equals CD, because the length of AB is the same as CD. So if we extrapolate this, making sure that I've got the exact top target up here as to not elongate this any further, you can see this is slightly more conservative than a bear flag, because this would actually be measured from the top up here after you've had your A, B, C. This is where you measure it from. If you measured a bear flag breakdown, you'd be measuring from here. Very similar stuff, but this would be yielding a price target down here at 12,100. Do I think that's in play? I mean, not really. First of all, I have to stick with my guns. I've been saying this for months now. 16,500 to 14,000 is my bottoming range. I'm not going to change my prediction on that until we do break to the downside of that. Does that mean I'm not preparing myself for the chance of a breakdown to the downside? Absolutely not. I'm going very heavy in Bitcoin between the ranges of 16,500 to 14,000. Mainly because I've been sitting on the sidelines for months now while everyone's been buying the dip, and now I've got a good amount of capital to step in and buy the dip. And if we go to 12,000, 10,000, great, I'll be buying the dip down there, but I would not want to not buy at 14,000, see it come down to my 14,000 price target, and then moon up to the upside. So with that being said, 16,000 to 16,500 to 14,000, this is where I go very heavy. This is a pretty brutal pattern, and subsequently if we do continue with this, you can see we would have originally had the 52% drop. This would be about a 75% drop to the downside to come. So very, very brutal. This would mean from where we are about another 36% drop, and honestly with the way the economy is the way the economy is right now, it doesn't really seem too far-fetched. But you know, one price target at a time. Let's talk about 16,500 and 14,500 first. Now, we've been talking about the dollar. Everyone was bearish on the dollar when the dollar took a correction. We told you, do not count the dollar out until it's broken below your weekly moving averages, until it breaks below your daily moving averages, until it has that major capitulation. It is not out for the count. And what is it doing? It is constantly cycling up, and it looks like it's getting ready to press to the upside and make a higher high. We also talked about this very, very beautiful pattern panning out for the dollar. It looks better when you draw the handle for the cup over on the daily time frame, but I'm just trying to quick fire through the analysis. I've got a lot of updates to make today, and as you can see, we are in a very, very nice cup and handle pattern to the upside. Do I think the price target of this is going to get hit? Absolutely not. Do I think the price target of our 1.618 Fibonacci all the way up here, let me see if we go to the daily time frame, because we had between the ranges of 110 and 111, let's find the dollar. Here we go. From our low of this major cup and handle, you should see the 1.618 all the way up here should be taking us to 111. Now, this is a lot more conservative than the price target of this cup and handle. Nonetheless, this cup and handle was very valid. I just don't think that it is going to be playing out. But with that being said, you know, we were predicting this move up, and as you can see, we're already starting to move up very, very strongly. If the dollar moves up another 6%, what is this going to mean for the stock market? Well, the Nasdaq is very, very likely to continue its descent down to the 200-week moving to the 300-week moving average rather. This would be a 20.5% drop. You can see in times of major capitulations, like down here, this was the 2008 recession. We moved below all of your major moving averages after the recession was confirmed, and within the next, I believe it's 28 to 29 days now. There is not an exact confirmed date on it yet, at least the last time I checked, which was about 24 hours ago. So if it's come out in the past hour or so, then so be it. But nonetheless, the next GDP growth report for the US is going to be coming out. If that is negative, then I'm telling you, that is a confirmed recession, and we're probably going to get absolutely clarted to the downside. We're probably going to have a big move below these moving averages. So once again, I really do think it's conservative to expect the dollar and the stock market to subsequently, well, the dollar to take a leg up, stock market to take a leg down. These are both bearish indicators for Bitcoin. Now, we talked about the fact that Bitcoin was long capitulating below the previous all-time high when you're accounting for the money supply. I'm not going to jump into this heavily in this video because I made an entire video about it yesterday. Let's see, if we go over to my educational, or if we go over to my channel, you can see this video, Bitcoin accounting for the money supply. We talked about it all over in there, but just a quick heads up, you know, we were talking about the fact that Bitcoin was capitulating below its previous all-time high, you know, 6 weeks, 8 months, not 8 months ago, 6 to 8 weeks ago. And as you can see, this is when you account for inflation, when you divide it by the M2 money supply, when you're looking at the real growth of Bitcoin because you're taking away inflation. We were long below the previous all-time high, so this was a very nice indicator to give us a heads up that, hey, potentially we might be heading down to these price targets as well. With that being said, let's move back over to our oscillators. So we talked about the AB equals CD pattern. I let you know once again my macro price predictions. We talked about how the dollar is likely to head up, the stock market is likely to head down. We talked about the macro market structure for Bitcoin and how when accounting for the money supply, we were already long gone and we're already pretty much down here at the 200-week moving average. Let's wrap up the video and talk about the oscillators, because I would like to make a separate video for Bitcoin later on in the evening and not cover everything right now. Nothing insane is going on right now. If you are new to the channel, warm welcome. If you're a veteran to the channel, you know that I've been calling for this for months and months now. So seeing this finally start to massively head to the downside really shouldn't be too surprising for you if you are already a veteran to the channel. And subsequently, just like I've been saying, lower price targets are definitely in play for Bitcoin. Moving on to the oscillators. So let's start off on the higher time frames and work our way down. We are starting to have a major capitulation. The squeeze bomb, which is my favorite momentum indicator, is still somewhat trending back to the heart line, which would be indicative that bears are losing control / bulls are coming back into control. But bear in mind, on the higher time frames, it takes a large amount of momentum to switch this back over into a bearish stance. And when we do, just quickly peek at the 4-hourly squeeze bomb, you will notice that we have already initiated that next leg to the downside. So if Bitcoin keeps on moving down, or even if Bitcoin doesn't move down anymore today and it just does what it's already done, the squeeze bomb is going to very, very quickly capitulate and head back down to the downside. Looking at the money flow indicator has been heading up very, very strongly. Lots of money is flowing in the market right now, but you will notice if we do get topped out at this range, this will be a one top, double top, triple top, and we're very, very likely to see a move back down for the money flow indicator. Looking at the MACD, we are below the heart line. Bulls rather are losing extreme amounts of strength right now. You can see when the MACD previously had a massive run up in October, we were all the way up here. You know, we broke down, lower high, broke down, lower high, and now it looks like the MACD on the daily time frame, this is already starting to converge down, so we're probably going to see a bearish flip on this very, very soon. What's that going to mean? That's going to mean that, you know, you've basically come down and had a double bottom structure so far, but if you do make a lower high on the MACD, then the only direction is down, my friends, and the MACD is probably going to get decimated before we have a chance of reversing. Moving over to the lower time frame indicators, as you can imagine, these are leading indicators of what is likely to bleed out into the daily time frame after you give it enough time. The squeeze bomb, like we already said, this reset some of its momentum in the past day, and now it is absolutely pushing very heavily down to the downside. The money flow indicator, while it is going up on the daily time frame, this only updates every day, and if we look at the 4-hourly EMA ribbons, not the EMA ribbons, rather the MFI, the money flow indicator, this is already starting to capitulate very, very harshly on the daily. You can see about a 8 basis point decrease over on the MFI. So very, very brutal considering we were only sitting at 40. This has drastically gone down. Money is flowing out the market, 23% down. And subsequently, this is probably going to be a leading indicator of the price of Bitcoin continuing to drop, just like we've been talking about. 4-hourly MACD, as you can imagine, we are gaining these red bars. Momentum is stepping back into the market. All you see to the upside is, you know, you've got these big swings up, bulls completely losing control, and lower lows and lower highs all around. And then when you look at the bearish structure, you've got lows, and then you come down and you take a massive, massive leg to the upside. And when the bulls do try and step back into the market structure, you will just notice that they did not manage to keep the trend running up. It's just another lower high for the bulls, and a lower low for the bears is indicative that we should be moving back down to the downside on the squeeze, on the MACD and the squeeze bomb and the MFI. So it looks like a lot of things are going on in the market. I hope today's video gave you some insight of what to expect next. Once again, if you are a seasoned veteran to my channel, this should not be of any surprise for you. You should already know, because we've been talking about this for the past couple of months. So once again, 16,500, technically 18,500 is the CME gap, that is the next level. 16,500, that is your 300-week moving average. And if we are going to confirm the Elliott wave theory held true, then we should bottom above this candle body close, which if we move over to the actual price chart of Bitcoin, will be here It's different on a lot of different exchanges. So for example, over here on Bitstamp, it was 10,700. So you do need to take it with a slight grain of salt when you are looking at charts like these. Let's head back over to one of our more macro Bitcoin charts. Over here, the candle body closes were at 11,500. But previously, was it? No, this was Bitstamp already. It's different on a lot of charts. So once again, take it with a grain of salt. Over on Coinbase as well, round about 11,500. So I think it's much more likely we bottom above 14,000. I'm not calling for anything below 14,000, but we do have a very, very nice and very valid AB equals CD pattern, potentially taking us down all the way to 12,000. So with that being said, that is all I've got for you today, my friends. Hope you found some value in today's content, and as always, cowboy out. Peace.